This is the only chart that you need to watch to figure out if we're going into a bear market sooner than later. This is combined stablecoin dominance showing USDT.D plus USDC.D. That's literally what you type in over here to TradingView, and it shows you the combined percentage of both of these dominance charts. A lot of you probably already know the USDT.D or the USDT or Tether dominance chart. So what's the difference here? Well, the difference is because USDC has quickly grown in its dominant share of the crypto market cap. So I think it's important to put these two together. Yes, I know, and I'm aware of stable.c.d, but the problem with this chart is that there's not enough history to do what I'm going to be doing in this video today. So everything that I'm going to be sharing with you is visible in these charts. You don't need fancy indicators, but I will be showing you what they show. You're not going to like what you're going to see. But before I get into it, what's up? My name is Aaron Dishner from the Better Traders. Good grief, and you're watching Coin Bureau Trading. Already a minute in and already flubbed. I'm not stopping. We're going to go. We're going to get this video done. Let's do this. So, first off, there is a level here of resistance. It's loosely called resistance, but we have seen the price of combined stablecoin dominance, again represented in a percentage, spiking up here from as low as 7.8% all the way up here to 8.85% over here, which is crazy, 8.75. This is basically a scary zone. Whenever we see stablecoin dominance increase, this is always going to be reflecting an increase of fear and selling, and stop losses getting triggered, and longs getting liquidated. You get the idea. When we go back over here to our October 10th dump, we saw this combined dominance from stables, USDT, USDC, pump wick to wick 26%, right up to our scary zone. This is hopefully our rejection zone. But honestly, this needs to be retitled into bear market zone. And this is going to be, well, once it updates, and this guy right here should actually be read as bull market top. Why didn't you? There we go. Thank you so much. I was reading my mind there. Why are these two levels as such? Well, if we just look at the timeline, it's pretty crazy. For starters, we can see the price of this percentage, almost flicked my glasses off, topping out here in March, which is exactly what happened with BTC and Ethereum. Everything was topping out over here in March. This is actually when we had a huge leg up because of all of the euphoria around the spot Bitcoin ETF hype that started back over here with this big pump you can see right there on the 16th of October. So the rally topped out here in March, as well as a lot of different indicators. So what this means is that when we see stablecoin dominance dumping massively, that is a very bullish signal. When we see it dumping a lot, majorly bullish. But you can see that it stopped dumping around the 5% mark. Keep that in mind. Then we saw a reversal, a move all the way up here, and the price moved up to these previous wicks that are right over here, which is really interesting in January. So we saw a little bit of a pause, a little bit of a correction, and the market kept going. But we can see that there are clear upper wicks here and over here going up to like 8.5%. And then what do we see happen next? Another massive drop. What caused this massive drop in stablecoin dominance, you might wonder? Well, all you have to do is look at the dates. November 4th, November 5th. That's when Donald Trump was announced as president of the United States of America. And we saw a huge increase on the 6th of November. And we saw BTC rally up from 69K up to 107K. Keep in mind the dates. November the 6th to December 17th. So if we look at that same time frame, November the 6th, we see a massive dump to December 17th, which is back over here. And then we see a correction. I actually saw a couple of these. First here on the 9th, and another one here on the 18th of December. Now, the main thing that we are waiting for in order for us to say, yes, the bull market is still on, is one of these. We really need to see a big, big drop in stablecoin dominance. A big drop in stablecoin dominance reflects that the total pie of crypto, and we know that Bitcoin dominance takes about 60% of it, right? So this is BTC. There we go, something like that. And stable coins, this is a measly 7%. It's a very small amount. We want this to be as small as possible. We want this just to go till it's nothing. Why? Because if the market has less dominance by stable coins, that means that dominance is shifting other places like Bitcoin, Ethereum, Solana, you name it, everything. So when we see this chart falling, it's a bullish sign for the market. So what did these levels have to do with anything? Okay, hear me out. When we saw the market absolutely start to panic, full panic was over here when we saw combined stablecoin dominance up above 8%. It actually shot all the way up here to a high, a local high of 8.85%. Look at the date, April 7th. If we go to the price of BTC, April 7th is right here. We saw Bitcoin drop down to 74K. And on the 9th, we saw a beautiful green candle, bullish engulfing candle, and we saw the recovery rally. Guess what happened over here during that same time? As we saw Bitcoin recover, we saw stablecoin dominance fall more and more, and it reached a low of about 6.15%, paused a bit, fell a little bit lower. Remember that big, nice rally that we had? Big, it was very short-lived, but we saw a big drop, we did, from 6.73 down here to 5.79% in stablecoin dominance. That big drop correlated or corresponded to a nice rally across the board. And of course, what happens when we get a massive long liquidation? A huge increase in, stablecoin dominance moving up, which reflects longs getting squeezed and liquidated, stop losses getting triggered, people pivoting into stablecoins. Now, stablecoin dominance is still really small compared to most of the main dominance levels. Bitcoin dominance at 59.65, Ethereum dominance at 12.91, Solana doesn't have that much. Others dominance 6.85. You get the idea. There's still a lot of dominance that's dominated by crypto. That won't change. We're not trying to figure out all the other ones. We're just focused on this chart. And the reason why is actually way simpler than you think. And I have data going back to 2021, pinpointing the moment where everything broke for the last bull market. And we're going to be looking at that in a second. But before I do, go down to the description. Check out the exchanges that are there, whether it's Femex, BYDFi, or 2bit. All of these have great promotions right now. With Femex, you can earn up to 30,000 USDT. With BYDFi, up to $10,100 of rewards up for grabs. For 2bit, you can trade and earn over 15,000 USDT. One interesting thing about these two is that these are both, actually all three of these are centralized, but 2bit does not require KYC, meaning that you can withdraw up to 50,000 USDT per day. There are also way more deals available on the Coin Bureau website. If you go over here, the first thing to check out is the Coin Bureau Club. Definitely check it out. There's tons of alpha being shared on Discord by Dan, my co-host, as well as Guy and Nick, who are on the main channels. So go there. There's also other tools, other exchanges to check out where you can learn and earn, as well as a 10% off discount to the course, 15 Minutes to Financial Freedom by the Better Traders over here at thebettertraders.com. Now, we need to go back. This is really important. The reason why I have these levels is because when we see stablecoin dominance getting up to these scary levels from back over here in January 2024 up to the current day, when we start to see it getting up close to 8%, that's a big warning sign. When we saw this big liquidation, seeing it get this high is not a good thing. Seeing it move up even more on the slightest little pullback, it's not a good thing. Notice how much this increases when there's enough fear in the market. But we can also see that same when there's a lot of confidence in the market. Now, the reason why this level down here is not labeled the bull market zone is because this is the bull market top. You guys already saw it in December over here on December the 6th is technically when we saw the market top out from the Trump pump. So from here to here, from this short-term pullback in January 2024 to here, March 2024, this was the top. Now, if things play out like I hope they will, and we see Bitcoin push up to new all-time highs this month and then topping out next month, we should see a corresponding dump down here to this level from 5.3%, maybe as low as 5%. If you think about it, if Bitcoin is going to break into a new all-time high, even though right now it doesn't look very likely because of how much it's struggling, but imagine if BTC does break out into an all-time high, that means that more of the market will be pivoting to Bitcoin away from stablecoins and also into lots of other alts. That means that we should see a corresponding drop in stablecoin dominance, but it will not drop forever. If we get this drop, the level to watch first is going to be here at about 6%. Again, this is combined dominance. I'll show you another chart in a second. Once we get about here, we're going to start feeling really good. Once we start to go below here, this is when people are going to start bragging online, sharing their P&Ls, saying, I lost everything on October 10th, and I made it all back in one trade. This is where we're going to see all those kinds of victory lap kind of posts and people. And when we're finally down here in this range, this is when people are going to be losing their minds, if it happens. So the bullish outcome is we want to see the market rebound. I do. I expect it to. And that means that stablecoin dominance falls down here. But what if it doesn't? Well, if it doesn't, we're most likely going to see more pain, more downside. And if we see stablecoin dominance move above these levels, basically it's a confirmed bear market ahead of schedule. What I actually expect to see happen is something like this, hopefully, and maybe we touch down here, and it's going to be a slow move. But eventually we'll see it do this, and then it's going to be brutal. This will actually be the confirmation of the top of the bull market. And then it will take a while. We've seen over here that it can take just a couple of days from December all the way over here to March, 90 days, about 3 months, which would actually work out really well. That makes a lot of sense with my timeline. So seeing the market starting to show cracks, we will see a big increase in stablecoin dominance. Basically, people getting stopped out, longs getting squeezed yet again, the market going back to full-blown panic. People are crying. It's not good. Okay? Now, we need to go back over here because we also need to look at the USDT chart. So we have the same concept over here for USDT.D, except something's different. Look at the dates. So this is when BTC started to go up. We saw stablecoin dominance fall down here into this, that historical market top zone. So we can see January 2021, alts went insane. A little bit of a pullback. February, alt's still going insane. Alt's still going insane until finally they stop and we see a huge increase in stablecoin dominance that happens over the span of just a couple days. It hits a then market bottom zone. This is when the market bottoms out first in May, dead cat bounce, deeper in June, and it goes a little bit further in July until finally Bitcoin starts to recover and it goes down. But notice that it doesn't go down all the way to the previous lows. That's a possibility for what I just showed you. We might see something like this, except it's doing more like the others. It's going up higher. But the thing is that when we saw the market or stablecoin dominance top out here in November, there are some clear signs, according to the TBO, that things were getting nasty and ugly, namely TBO breakouts on the daily. That's bad. Seeing a close short lets us know in advance things are not looking good. TBT divergence is letting us know, watch out. So these things aren't flashing yet, but once they do, I'm going to be screaming it from the rooftops. That will not be good. The other thing to consider right now is overhead resistance. Now, this is going to be the most damning chart you're going to see, unfortunately. We're not using special indicators. We're just drawing trend lines. We're looking at this level here, This is, again, USDT.D, just drawing to this next high that's right here and drawing from that high to the next high. We've seen some very dangerous pumps recently, seeing it come up here. Now, we could take it to this level, but unfortunately, if we do this, well, it kind of breaks everything. Let me show you. Because it's basically, the price is breaking out above it right now. So again, I'm giving you the best possible scenario. I'm not focusing on this one. I'm giving you the higher one. Benefit of the doubt. Okay? This is where things get to be not so fun. Let's go back over here to our combined stablecoin dominance. We already know we have these zones that have to hold. We have the same long-term resistance level. But the thing about this one is we don't need multiple lines. We just have the one. We have the top here in June, then another top here in November 2022. There's the FTX crash. We see it go up. Right here actually was the crash. And then Bitcoin starts to bottom out here in January, and we see it fall a lot, right? I want you to see this. You can see it respecting resistance here. It pierces resistance here in April. It pierced it again on October the 10th, and it's getting close. Now, I understand. You're like, Aaron, you know what? I like you, but please shut up because you're making my stomach hurt. Okay, I get it. Aaron, I like this idea, but this is just a trend line, and it's just on a dominance chart, and it's, for one, it's a combined chart, so how can you even call this valid? I get it. I understand. It's fine. But you have to understand that we're starting to see the signs that things are starting to flip towards the bullish side, which again, I don't want to see. We haven't seen our breakouts. We did see them back over here in February, which was not a very, very happy sign at all. This is a very scary sign and led to a big increase. We don't see those yet. What we really want to see is stablecoin dominance respect this level and dump. Again, I'm with you guys. I am Moon and Papa for a reason. I want to see combined stablecoin dominance fall down lower. But there is a good chance that it might not go as low. And dare I say, I don't want to say it, but the main thing is that stablecoin dominance is a great indicator of where we are in the market to identify extreme tops and drops, or market tops, market bottoms. And unfortunately, we're getting into a very dangerous zone in terms of stablecoin dominance. So again, if we see stablecoin dominance continue to rise, which will correspond to the market falling even more, we're getting dangerously close to some levels that we don't want to see it break. We want to see it fall down more and more and more to give us a little bit more peace of mind, and also to help us to make some more money before the bear market comes next year. I still think that the bear market is coming. I think that 2026 is going to be a bear market. I think that Bitcoin is going to be topping out. I mean, if my thesis plays out next month, in less than a month, which is crazy, and alt's topping out in mid-December, and then that's that. It's funny, though, I do want to point out a couple of months ago when I started sharing this more and more, how vocal a lot of you were saying, there's no way, like, that's so stupid, no, nuh-uh. And after this last shakeout, it's funny how many people have said, well, I want to start taking profit at 130K if it goes up that high. The market's been completely flipped on its head. Everyone that was so bullish before, and there might be some, but a lot of people got real quiet or they've changed. But I mean, it's okay to reduce your targets. Trust me, I reduced my target of BTC from $173,000 that I called 2 years ago down to a max of 150, a max. Then I think we're done. One of the main reasons why I think we're done is we're seeing signs of exhaustion. We're seeing signs of people saying they're exhausted, literally typing it. We're also seeing lots of profit being taken early. We're not seeing charts really pumping and having sustained pumps except for a couple, like literally a handful. I feel like we're closer to the end than we are to the beginning, for sure. So if I'm wrong, it's okay. Everything goes up higher. You guys are happy. You're making lots of money. You're laughing at me. Cool. I'll still be here making videos. But I want to make sure that I'm protecting my portfolio at all costs. Again, You do you, boo-boo, as I like to say. But the main thing is you got to make good decisions for yourself to preserve your portfolio and your capital, or else you're not a trader. And speaking of trading, watch this video before you go. Until the next time, you know what to do. Stay awesome and stay in the green. Peace.